Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, Director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
Hi, my name is Rick Telberg for CPA Trendlines, and it's my privilege and honor today to introduce Rory Henry, the chief author and editor of the Holistic Guide to Wealth Management, a new book just out from CPA Trendlines. It contains Rory's thoughts on the modern state-of-the-art wealth management practice, plus contributions from more than 24 experts in the field. And Rory has two of those people with him today. I'll let Rory take it away from here and introduce the guests. Thank you.
Thank you, Rick, for that introduction and for publishing the book. As you stated, I have two excellent guests joining us today. I think our audience is going to appreciate some of the latest findings that they're going to present, done by Vanguard and Trust Will, as well as we're going to talk about some practical steps on how to integrate holistic services into your practice. So I'll let you fade into the background here, Rick, and let me introduce our first guest, Mike DiJoseph. He's a CFA and senior strategist at Vanguard's Investment Advisory Research Center, which focuses on investments, wealth management, practice management, and behavioral coaching. Mike, thank you for joining us today.
Thank you for having me.
Yeah, buddy. Let me introduce our next guest as well. He is the head of advisor sales at Trust Will, which is a leading estate planning platform that has helped hundreds of thousands of families create an estate plan. I know they had big news today with a Series C funding. So Andres, welcome to the panel discussion.
Thanks so much, Rory. Looking forward to the conversation.
Yeah, buddy. All right, let's start off by discussing the Advisor Alpha, now 25-year study, Mike, which really goes into the value of an advisor. Can you talk about that research really and the evolution back from 2001, which highlighted really the value proposition of an advisor was mainly focused on the portfolio and beating the market, and really how that has changed now to providing after-tax returns. So can you kind of go over really the evolution over the last 25 years and some of the findings from that study?
Yeah, sure. And again, appreciate you having us. Super excited to be here and talk about this stuff. We've had many conversations about these topics, and so we'll dive in. So the Advisors Alpha concept, I'll start with kind of like high level. What does this actually mean? And it's like in the name, it's Advisors Alpha, right? If you have investment alpha, you have a benchmark and you have your performance, and the difference is the value that was added in terms of alpha. Well, Advisors Alpha is where would clients be? Where would your individual clients be? Where would our industry be without advisors versus where they are? And that difference, the value added there, is the Advisors Alpha. And so we look at it in kind of these four broad buckets, which is the portfolio, right? The investment management, that's important, but it's also one of the foundational parts of Advisors Alpha is acknowledging that that's just a means to an end. And so it's focusing on the goals, focusing on the wealth management, the financial planning, the taxes, all the things that we've talked about, adding in behavioral coaching. So it's, all of that stuff is really important, but none of it really matters if you don't stick with it through thick and thin. And then finally, acknowledging the value of the service offer itself. So the time, willingness, and ability that most of our clients do not have to do all of this on their own. And so that's Advisors Alpha. Like you mentioned, 25 years. It's crazy to hear. The term itself was coined internally at Vanguard all the way back in 2001. Vanguard for years has offered advice to our own retail clients. And so at the time it was, hey, we're going to do this advice. We're going to charge a fee for it instead of a transaction, instead of a commission. And the question was, well, what are you doing then? Right? Like the traditional value proposition of advice and of the advisor at the time was, I'll sell you a product. I'll
Yeah.
sell you a stock. I'll sell you a mutual fund, whatever it may be. And that led to the creation of the term. Well, there's all these other things that we're going to do. We're going to help you reach your goals. Fast forward 2010, that's when I actually joined the team, predecessor to the team that I'm on now, where we actually started publishing on this work to our partners out in the field, like you, Rory, right? Like to advisors. And it's been really cool to see how it's evolved since then. So we just published our 25-year retrospective, and we've actually titled it Celebrating Advisors Alpha, Clients and Their Advisors Thriving Together for 25 Years.
Mm.
And, kind of not to bury the lead, but that's exactly what it's been. Clients have thrived, and advisors have thrived in a period of tremendous change. We would say change for the better. I know we're going to get into it and talk to Andres about technology and things like that, but that's kind of the headline there. So things have gotten better. Clients are getting a better deal, and the industry is better than it's ever been.
Yeah. And no longer really are financial advisors hanging their hat on really that portfolio performance. We're really moving into that holistic advisor where we're incorporating the estate planning. I always say, and people heard before, I say estate planning really is that family office level of care. So we really shift that over to now Andres and really talk about the evolution of estate planning. Because I know you started this, what did you say, 6 years ago? And the technology, was the first of its kind. Can you really talk about the value proposition and how advisors are providing just so much greater value by incorporating estate planning using technology like trust and wills?
Yeah, of course, Rory. And hearing Mike's story, this resonated big time. As you know, I used to work with financial advisors at a branch at JP Morgan. And this was 10, probably 15 years ago when I first got licensed. And I vividly remember, did it for about 10 years, is the whole process of the advisor at the time was, what's your current portfolio? Let's do an analysis. Here's a proposal. Here's how we can do better, etc. And that was really the engagement of the financial advisor. And then it's okay, let's do the annual reviews. Do they have more cash, etc. And literally for a decade, that's what I saw day in and day out. And on the back end, what I started to really see on the private banking side is the clients that weren't protected by an estate plan. They had a family member that went through something, they were in a hospital. Long story short, it's what really helped drive our mission on how we can make estate planning more accessible and more affordable. And Rory, that's context to answer your question. Today, with technology, we have many different avenues on what we prefer as human beings, depending on your assets, depending on your age, etc. But what we continue to see is that clients looking for advisors want holistic planning, meaning I don't want to go to 3 or 4 different office or contacts to get all my stuff done. I want to go to one trusted source that really helps me understand my goals, my gaps, and helps me build a plan towards that. And looking back, and even this is my own kind of personal reflection, but looking back at like all those years of working with advisors and us kind of overseeing really not protecting our clients' assets and what they care most about. So I think what we're seeing now is like firms that are proactively adopting estate planning. It's a way to deepen relationships. It's a way to connect better with your clients' values. And many times in the past, advisors weren't asking, why are we building this financial plan?
Yeah.
There's so much there that we're really helping advisors uncovering and really deepening that relationship. And then also we have older advisors that are potentially losing clients. And if they are not incorporating estate planning, those clients leave and they go somewhere else. So at the end of the day, it's really understanding their goals, their fears, and then how can estate planning help an advisor drive conversations that help deepen that relationship with an end result, I think, of deepening the relationship and actually getting referrals and getting introductions and really working with that next gen.
Yeah, I always say that you can connect generations with estate planning. It's a great retention tool as well as a great prospecting tool, and it streamlines the technology now streamlines that process. Really, before you think about it, you'd have to go into an attorney's office, and sit down in front of them and have these uncomfortable conversations about healthcare directives, power of attorneys. And so you can do this from the comfort of your own home, and you have an advisor walking you through it. It's such a tremendous value add. Now let's kind of go back to this Advisors Alpha study here, because I want you to kind of give our audience members, Mike, the nuts and bolts here of how the methodology can show that advisors can provide upwards or exceeding sometimes 3% net return. So you can break down the different ways in which they can do that on an after-tax returns basis. I always say that really controlling the controllables. We can't control the market, right? We're controlling the controllables.
Yeah, like you said, you can't control the market, but we can control our exposure.
Yeah.
We can try to control our client's reaction, right? All of those things. So, we have a very math savvy audience here today. So I'll start with this, that it's, much more of an art than a science. It's kind of a rule of thumb, if you will. And so as I kind of tick off some of these things, our math savvy audience here will note that they don't actually add up to 3%. The good news is they add up to significantly more than that, right?
Yeah.
So we kind of think about it in range. Broadly speaking, so we kind of split it out into these modules, right? And we say, here's the things that are not even remotely close to an exhaustive list of all the things an advisor can do. Like, we don't include estate planning as something that we've quantified. It's so unique to the individual, and there's so much value there and like so many different dimensions. So it's a very low bogey here. But we look at it in gross versus net returns. And so it's how do we close the leakage from the portfolios that advisors work so hard to build? And so 3 sources. 1, costs. So high costs and the detrimental effects on investment outcomes of high costs as well, both to the client themselves as well as the advisor's practice, right? A dollar paid to the investment management industry is $1 less to their book of revenue and $1 less to their clients towards their goals. And then taxes, huge one that we've talked a ton about, whether it's an accumulation or decumulation. So asset location, we have at 60 basis points. Tax smart withdrawal strategy, right? Tax efficient retirement strategy. We have currently at 100 basis points or more, right? I think, rule of thumb, probably 100 or so. Tax loss harvesting is something new that we've added. It's something that Vanguard's done a lot of research on in recent years. It's something we're actually doing now. We acquired a firm several years ago, Just Invest, and so we actually have a direct indexing offer. It's something we really believe in. That adds a lot of value, and we have that as up to 150 basis points or more. For most people, it's going to be significantly less than that. And then that third source of leakage, right? So we have costs, we have taxes, and then the big one is behavior.
Yeah.
And so we have that at up to 200 basis points or more. And that comes from looking at industry aggregates. What are people actually doing? One of the great things we've seen looking back over the last 25 years is investor behavior measured in aggregate is significantly better than ever before. Our hypothesis here is that's because advisors are better and they've embraced the behavioral coaching element of it. But for any individual client, any one of these things could be worth significantly more than that. I think of behavioral coaching as existential in terms of the client's ability to meet their goals. And, for old guys like us, remember the MasterCard commercials? It's like, you have your $50 dinner, your $100 for babysitting, and, the night out with your loved one is priceless. I have a infant in the house right now, so I'm looking forward to those priceless moments of, a night out again. I don't remember what that's like.
You'll get there, Mike. You get there. Well, let's a little dive into the behavioral coaching aspect of this, because I know advisors really are acting as emotional circuit breakers for clients during market volatility that's really preventing these significant wealth destruction issues from occurring. So let's really give an example for our math audience out there on really how these numbers can unfold. I know you had on one of the charts, I'm sure you're probably familiar with it, Mike, but maybe like the COVID-19, March 2023, the market drops, can you kind of go over the different possible universes that could occur, whether you stayed invested, whether you went to cash or went to bonds?
Yeah, I love you said possible universes. We talk about right the alternate universe. We actually have a tool we call it our market hindsight tool, where you can actually plug in a date, maybe a time you had a conversation, or maybe a client actually did something and it tracks like where are you versus if you had stayed there. It kind of goes back to that advisor's alpha concept of what's the benchmark, right? As a, from an academic perspective, I've spent a bulk of my career now measuring the value of advice, and it's always like versus what. So we try to create that alternate universe. So COVID, for example, 2020, fresh in our minds, relatively fresh, I guess. You have $1 million portfolio, Jan 1, 2020, market bottomed out, I don't know, sometime late March, early April, right? Let's say it was so fast that if somebody did do something, unfortunately, they were probably close to a bottom just because it was so severe and so rapid. Let's just say you locked in a 20% loss, right? Put it in bonds versus having stayed invested, even for, call it a 60-40, 70-30 investor. The $1 million portfolios locked in at 800K. Bonds, did okay the rest of that year. Cash was still at zero for a couple of years. Anyway, you fast forward, even to just the end of that year, right? Like that $800,000 portfolio is still locked in there versus if you had just stayed the course, the market ended up being up almost 20% for the year. And so that $1 million portfolio, even for a balanced investor, was probably like 1.15 million versus 800,000. And so you'll notice like our range in the paper is 200 basis points. That's a lot more than 200 basis points. That's a sizable fraction of the entire client's wealth. It'll never be recoverable. People did it. Unfortunately, it did happen. And from an advisor perspective, that value may have been delivered in what ostensibly was a 15-minute phone call, right? Talking the client off the ledge. And that one conversation could have paid for the entire lifetime of fees that a client would pay that advisor. Again, it wasn't 15 minutes of value though. It was, as Andres put it, like freeing up time to build relationships, and you're having these great conversations with your clients, and, you're doing the estate planning, and you're keeping the goal really centered as the important part of what we're doing together. And so all of that work builds the trust that's required to actually execute in those moments that matter and drive that value. And they tend to be fairly episodic. I'm looking at the data now. I mean, we had a big downturn in early 90s. We had the tech bubble burst, early 2000s. We had the financial crisis, 2008-9, and then COVID was severe and rapid. But what we saw is that the equity market, like the average allocation to equities, would track down into the low to mid 30s during these downturns. And then at the top of the market, it would be, mid to low 60s in aggregate. So the average, kind of the market portfolio was floating between, call it 35 and 65% equity. Since roughly 2012, 2013, which is when we really saw these huge changes in the advisory industry, particularly in the compensation model and the focus on holistic planning, it's been roughly equal. Right, we saw during the COVID downturn, the market portfolio ticked down to about 55%. Right, normally when you see these big downturns, you'd expect it to go down tremendously. By our math, just kind of back of the envelope, we would say that's worth $500 billion to the industry of value added from better behavior just in the last 12 years.
Yeah. Now, I know you touched on trust here, and I really like the study that you all did on the different types of trust. Functional, emotional, and ethical. Can you talk about those findings here and why emotional trust, was the greatest of the three?
Sure. So the research you're referring to, we have it in a piece called "The Evolution of Advisors Alpha: People with Portfolios," and it was our look. We worked with a firm to survey thousands, over 10,000 advised clients, not Vanguard clients. Might very well be your own, Rory. And we asked them, like, why'd you hire your advisor? Why would you fire an advisor? Basically, think of any question you can think of. And we tried to get a pulse on what clients were doing and why they were doing it. And we wanted to, kind of one of the things there, we wanted to make the case to advisors that relationship management is business development. It's not, build a portfolio, spend all of your time doing investment due diligence, and that's the path to success for either your clients or your practice. And it led us down this path where we said, well, the most advisors are finding new clients through referrals or some sort of local connection. It was almost 80% of new business comes from a person, right? A referral or some sort of connection. And so probably not surprising. And we thought to ourselves, okay, well, what drives that? And the answer was the level of trust. So the higher the level of trust that a client had in their advisor, the more likely they were to offer a referral. We said, okay, well, what are we going to tell our advisor partners out in the field about this? How is that actionable? And so we were able to actually decompose the components of trust into, as you mentioned, functional, which is the nuts and bolts of being an advisor doing the job. That was less than 20%. Ethical was at roughly 30. That's just acting in your client's best interests and making sure they understand that. Over 50% was the emotional.
Yeah. Whoops.
For those clients, the single retention and asset consolidation was high levels of emotional trust.
Yeah. And, that's for obviously a profession that hangs its hat on trust. That's welcoming. I think as I talk about throughout the book and the return on relationship, it's really developing that emotional trust, having a greater connection with clients, helping them, do the estate planning, the intergenerational planning, and really providing that holistic type of offering to clients here. Now, before we kind of go on to Andres and some of the findings from Trust and Will and the power of estate planning, Mike, I want you to touch on, because I love it, is the right mindset, wrong market, because it's nearly not folks' fault out there. And every other facet of their lives, whether it's college rankings, Michelin star ratings, they go based off of basically what other people are doing. So can you talk about how, you came up with the right mindset, wrong market, and why people fall victim to that when trying to take that methodology into the markets?
Yeah, this is one of those things where it just seems to make sense to us, and our research has showed this. But if
Yeah.
you say it to someone who's an expert or a PhD in behavioral psychology, they'll look at you like you're insane. So I guess I'm the crazy one apparently. But so research was called Right Mindset, Wrong Market, and it was, as you said, we looked at decision making across all of these different realms, inclusive of investing, and so non-consequential, like where are you going for dinner, right? We looked at Michelin stars versus Yelp reviews, and it worked. Right? Ratings worked, led to good outcomes as measured by Yelp. So you use Michelin star, it leads to a really good Yelp review with a really tight dispersion. It's like almost guaranteed to work well. We looked at all these different areas of consumer decision making, right? Whether it's colleges, automobiles, vacuum cleaners, you name it. Trinkets on Amazon. In the medical field, there's this huge body of research around surgical skill,
Yeah.
and kind of the durability and persistence of outcomes. And same thing, if you pick past performance of surgery, it's going to lead to lower mortality and lower morbidity. And we build this case up, and then we say, so I can't think of, I've challenged people, I can't come up with another area of life in which that decision-making process doesn't work. But what happens is investors and professionals and all of us, our tendency is the same, is to take that decision-making process that works everywhere else so well and apply it to investing. And the smart people in the universities and the ivory towers tell us that that's irrational and that our brains are broken. Our clients are their own worst enemies. They're making mistakes. They're blowing themselves up, shooting themselves in the foot, right? We all know all the negative language around that. And we just kind of turn that on its head and say, it's not the people that are the problem, it's the market. It's the right mindset. It's just the wrong market. And we kind of go through why that is. And it's just, investments are it's so counterintuitive. You have the valuation metric, right? As things do well, it kind of sets the stage in general for future underperformance. It's just billions of people, billions of participants in the global economic system. And the other thing with investing is it has the second, third, fourth, fifth level thinking, where it's not like, what's this company going to do? Or is this a good company? It's like, is it a good company? Maybe. Is it a good business? Maybe. Do other people think it's a good business? Do other people think that other people think that other people think it's a good business? And you kind of go crazy as you think through that. But all of that is a good news story for advisors, because it just says, hey, like, our clients aren't broken. We're not broken. We just need a little bit of help and a little bit of perspective. And as you put it eloquently earlier, you need an emotional circuit breaker
Yeah.
between people, no matter how smart they are. It's not right. This happens at the institutional level. It happens at the retail level. We've joked there's a big investment firm. I think this is true. I've never seen the study, but they, the possibly apocryphal story is that, their investors who are deceased have the highest returns. So, take it for what it's worth.
Right. All goes great here, Michael. I think you've laid out, I know we talked about how investment management was historically what financial advisors were known for. We've moved on to portfolio, and financial planning is really the next step. This behavioral coaching is really a key aspect of the value advisors provide. And this goes into estate planning. Now, being that other piece, I always say that estate planning and exit planning, we're really working backwards, right? So I want to bring in here, Andres, can you talk about the work that you're doing at Trust and Will and helping folks streamline this process and provide greater value to clients?
Yeah, absolutely, Rory. I think when we look at kind of the old way of doing estate planning, it's referring to an attorney, hoping the client takes action and calls or emails the attorney.
Yeah.
And a lot of the things that we kept seeing is like, there's the ambiguity of how much is this going to cost? Am I ready for this? The kind of inconvenience of like going through with your spouse to go to the attorney's office. So when we looked at it and said, okay, there's like the very high net worth and ultra high net worth, and then there's mass market and affluent. And very similar, for example, to what TurboTax has done for tax preparation is really what we've done for estate planning. So as an advisor, how can advisors help streamline educating clients on estate planning, holding clients accountable, which I think is a huge, huge part of Mike, kind of what you were talking about. There's a lot of emotions around investing. There's also a lot of emotions around estate planning. So how can advisors help hold that, drive that education, drive that accountability to make sure that it's executed? And as Mike was talking about trust, I kept thinking about, obviously at Trust and Will, we drive a lot of our decisions around stats. And if a direct-to-consumer client comes to set up an estate plan without a financial advisor, about 25% odds of them actually going through and completing the full estate plan.
Wow.
Compared to a financial advisor, so a referral from a financial advisor, 75% completion rate. So what does that kind of show is advisors are helping. One, there's that trust that they've built with the advisor and the clients. So when I bring up estate planning as an advisor, well, one, clients are very likely going to say, yes, this is something that I've heard about. I know the importance of it. Educate me, please. Yeah. And then two, hold me accountable. Just like you're helping me hold accountable on what I told you for my ideal retirement, for what I want to provide for my kids' college education, et cetera. It's all about that accountability. So in short, Rory, what we've seen is a very, very big uptake. The T3 survey was just released last week.
Yep.
And we've seen estate planning has been the highest 2-year growth in technology. We've seen a 27% growth in the last 2 years in estate planning technology in the financial advisory market. And when you look at, clients still not having estate plans, and we have a lot of stats on our estate planning study, but in short, from a CPA financial advisor perspective, you have the trust, you have the relationship. Clients are now, in some surveys that we did last year, when they're looking for a financial advisor and to hire someone, that is literally one of their checkpoints. Yeah. Does this advisor include estate planning as part of their service model?
Yeah, well, let's talk about the survey, because you surveyed 100,000 people, Andres, and I know, was it 55% don't have an estate plan at all?
Mm-hmm. Yep. So 83% of Americans recognize the importance of estate planning.
Yeah.
So there's the awareness about it, but only 55% or 31% have a will, and 55% like any documents. Yeah. So that's really, showing us in the industry, especially when when we work, I think at this point, we have about 17,000 advisors that we work with. When they start to work with us, they tell us, gosh, probably less than half of my clients have an estate plan. So even, I wish this stat was like clients that don't work with an advisor, but we're actually seeing some consistencies in advisors that work with clients. Obviously, this is changing. You have us and a couple other players in this space that are really, really empowering advisors to change this narrative and to drive that accountability and education. But a couple other stats that I actually found also very surprising. But 20% of Americans trust AI generated legal advice more than human attorneys. That was a surprise to me.
Wow.
And obviously what we're looking at now is how can we help deliver and help automate a lot of the estate planning piece with technology, including AI. But study after study continues to tell us that clients still want technology driven, but with a really good support model from someone that they trust and that they can go with. And this probably correlates with a lot of what Mike was talking about from that emotional aspect of it. We're just emotional human beings, and we're going to make, a lot of times make decisions based on emotion. But that was definitely one. But the stat that I was going back to is 48% of millennials expressed interest in receiving estate planning services from their financial advisor. So that is like super important for you to look at, is like when you look at your next 2, 3, 5 years as a business owner, how will you differentiate what you offer compared to the Robin Hoods, compared to the next RA, compared to the next CPA firm that's going above and beyond their service model?
Yeah. I know we've talked about the augmented advisor AI, Mike. People still want to deal with someone in these complex, situations that they're making the correct decision. I know AI is, obviously a scary topic for some folks out there. Can you maybe talk about what's going on with regard to AI in the wealth space here?
Oh yeah, sure. I was thinking too, it sounds like there's another book to be had here, something for lawyers, right? um, yeah. So in the AI space, I mean, I think it's less AI, and I think it's what Andres is talking about with technology more broadly speaking. It's how do we? So the way we put it is we talk about this concept of uniquely human. And so a few years ago, our economics team at Vanguard put out this study called The Future of Work. And this was before OpenAI blew up a couple of years ago. And it was basically us saying, hey, we don't think technology automates away jobs. What it does is it makes jobs evolve to take on more of a uniquely human element to it. And they break down kind of basic, medium, and advanced tasks. And I think the good news story here is that technology, generally speaking, as we look back through history and advice, and I think most industries, has automated away a lot of what we've been doing that's not really high value add. It's not uniquely human. And so I like to talk about, I use this term, the bionic advisor.
Yeah.
It's like, hey, there's stuff that should just be totally automated away. Like before I came to Vanguard early in my career, I worked for an advisory firm, and my responsibilities, one of them included rebalancing portfolios. And it was, literally like printing out reports, creating a spreadsheet, figuring out trade tickets, and then faxing them to a custodian. That should be automated away, right? And it is. It's a button today. I think the thing that's different with AI, instead of just automating things away, I think AI is kind of the first thing that really helps us augment some of that uniquely human element, right? And so it's one of those things we hear a lot about. I haven't seen a ton of it yet, but I think there's a ton of potential there around how can we use AI to help us better understand our clients, how to better serve them, how to better manage our own time and things like that. So there'll certainly be automation. But we'll see. I'm not convinced that clients are necessarily going to trust AI for their advice. I think they're going to trust advisors who are really good at using it, probably in the background.
Yeah. I know it takes on a lot of the administrative tasks, like you said, the rebalancing, stuff that folks that may not be familiar with the wealth space might have some fear with. But a lot of that work's done by the computer now, where you can focus on more of the high level tasks, more of the human side of advice, as I outlined in the book. Now let's shift back to here, Andres, because I know a main sticking point is, or barrier to estate planning, is just the sheer procrastination of getting started and doing it. I know there's family dynamics also take part. So can you talk about maybe some tips that you guys talk about on how we can help people follow through with those estate plans?
Education. And
Yeah.
I'll tell you, we've learned so much in the last few years, Rory, but our best firms, I mean, when you look at, you go to their website and it says like holistic financial advice or comprehensive financial planning, whatever you want to call it, the firms that like really take this to practice are the ones that say, Rory, your new clients, and they have a very detailed process for an existing clients and then for new clients.
Yeah.
And as part of that onboarding process, if it's a new client, Rory, as an example, this could be meeting 2 or meeting 4 as part of like your onboarding process with that firm. But estate planning 1, you collect that information. Do they have an estate plan? Yes or no? If yes, when's the last time it was updated? So you have that, you start kind of building that database. But from an adoption and accountability perspective, we have what I think is like our best checklist that advisors just thrive about. They will literally set up a meeting, and it's an estate planning meeting. So there's a difference between, hey, Rory, like here's a link to Trust and Will, please get it done. It's really important. I'll make sure you get it done. To a very different conversation, which is, Rory, estate planning is really important for my practice. It's important that as I build your financial plan and your goals and I help manage your wealth, that your family is protected, that you have guardians for your kids. And a lot of times people are like, wait, what? I need guardians for my kids. It's just little things.
Yeah.
So long story short, it's that 30-minute meeting that helps really drive the education of the ins and outs of estate planning. And in the past, I think there's always been a misconception of like, well, what can I do around estate planning, like as an advisor? But at the end of the day, you can drive education all day long.
Yeah.
You're not providing legal advice. You're not recommending a product. And long story short, Rory, once that advisor drives that meeting about what are your values, let's talk about estate planning and the decisions that you should be considering, that accountability rate goes up. Because now the client walks away and they're like, gosh, what a impactful meeting that might just help me understand what I need to do, right?
Yeah.
Now from there, there's a lot that advisors do is like next steps and driving accountability, because we all know we sometimes tend to think nothing's going to happen to us, or we have a lot of time before anything happens. So from that perspective, we have a lot of advisors that drive that educational meeting, but set very like detailed next steps on what to do, either with Trust and Will, either with an attorney if it's a more complex estate plan, but detailed like next steps. And via CRMs, many firms are now have like an automated workflow that they check in with their client. So it's an additional touch point. And then what's really cool about this is like I think it's a two-part. One, it's getting the plans either updated or in place. And there's a lot that advisors are doing around like the trust funding aspect of it. But then talk about really integrating estate planning into your service model means not just, yeah, my clients got their estate plan done, check mark. But there's the different life stages that your clients go through. And then it's how can advisors via our tools and our intelligence, they can see, gosh, Rory moved states, but he hasn't updated his estate plan.
Or Mike just had a kid, right?
All these different life stages. And that's what clients at the end of the day really care about, right? So now advisors are being able to go into their, annual meetings and have these insights on who's named in the estate plan, has beneficiaries been updated, etc.
Yeah. And also including pets, right? Digital identity. Like those are the modern type of things that you can put into an estate plan.
Absolutely. Let me find, here it is. 62% of Americans in our study believe that pets should be considered with the most importance as humans in estate plans. And I have 2 dogs myself, and that I relate to that. These are we're expecting our first child in July, but like today, those are like my kids, right? So that's a really important part of it. And then this whole like digital world that we live in now, Rory.
Yeah.
Estate planning has shifted from like your hard assets to the digital
assets
that we live in, right?
Yeah.
So how can advisors drive more education around, well, what's a regular executor versus a digital executor, and all the ins and outs of this new modern world that we live in?
Now you're making some headway here in regards to e-wills with some states here. Can you kind of talk about where you're seeing the estate planning technology kind of move and some of the regulatory issues that are in front of you?
Yes. So anyone listening, if you've ever had to get something notarized, the whole process is outdated.
Yeah.
You have to make an appointment, take your ID, pay $10 a signature. They take your thumbprint, etc. Long story short, it's just outdated. So we're proud to really been pushing the envelope here In Florida, don't quote me on it, but I believe 3.5, maybe 4 years ago, we executed the first e-will in US history. So meaning we had a family creates their estate plan online via trust and will, and within minutes get the documents notarized online. So talk about seamless, removing barriers. That's now live in about 8 or 9 states. Don't quote me on the number, but it's right around there. So some of the legislative kind of hurdles is how can we adopt this in all 50 states? How can we come to market? Us, our competitors, which are obviously helping raise awareness on estate planning, but the ability to say you can send your clients and walk them through the process. They can draft documents, execute documents all online. I mean, adoption levels would go, I think, even higher than what they are today. So that's definitely something that we're working hard towards. And then I would say, Rory, like longer term, let's face it, we all pass. We haven't found a solution for that yet. So how do we make the generational wealth transfer easier and more connected in a digital world?
Yeah. I mean, we're sitting on 144 trillion. That's really stated through 2048. It's a wonderful opportunity to really start advising the next generation through something like Trust and Will or an estate planning technology to make sure that you can meet those next gen clients where they're at. All right, so let's do some final thoughts here, practical steps, or anything that you want to leave with our audience. I'll hand it over to Mike for some commentary.
Sure thing. And Andres, congratulations and Godspeed on the little one.
Thanks, Mike.
Get in the gym, eat healthy, have some fun for the next few months. But you're in for a ride. It'll be a good one.
That's what they'll tell me.
I also just want to piggyback on some of the stuff he was talking about. These conversations that we're talking about with trust and estate and generational planning, that's the exact stuff we didn't go into this. And this is kind of my closing thoughts here. Like, that is the type of stuff that's driving emotional trust.
Yeah.
So if you think about what's important, and Andres said values, I think that's really important because that's, to me, like, what's the future of this industry? It was transactional, and then it was wealth planning, and we talk about goals-based planning, and I think it's now values-based planning.
Values-based planning.
Goals,
Yeah.
the goals are really just like, how do I operationalize all these moving pieces, and how do I do the math and numbers to help you achieve this value? Like, even if it's something like retirement, your goal might be retirement, but the value might be more time with your family or time to devote to a cause that you really care about. So just wanted to kind of reiterate on that. And that is my action item. If you're an advisor or somebody listening to this, if you're a CPA that's really thinking my value proposition is the numbers, my value proposition is the taxes, and understand that's a natural inclination to say, hey, I'm great with taxes. I'm a math guy. I can come in here and do all this and add 300 basis points in value. That's important, but that's not the type of stuff that's going to leave your clients pulling away from your office or getting off the virtual call, just thinking to themselves, like, wow, that was this super impactful meeting that I want to go tell someone else about. And so the key to success, both for your clients, because you need to build the trust with them so that they'll actually listen to you, and for your practice in terms of your ability to get new clients, to retain the ones that you have, and to consolidate assets and services, is literally the key to success for all of that is having emotional conversations. Yeah. Nobody else is asking your clients these questions, and they're hard questions, right? They're really difficult questions. That's why this is a great business, I think, for people to be in. You can do really well for yourself and help your clients, but it's hard. Right? It's not a math job. That was my mistake when I graduated college and went to work for my first firm as an advisory. I was like, I want to be an investment nerd, right? I want to do Excel spreadsheets and do analysis. And I quickly realized, like, the first day, I was like, oh wow, this is a people business.
Yeah.
This isn't a number business.
Yeah. It's not so much the return on investment or the return on tax savings. I go back to the return on relationship.
Yeah, exactly. The return on relationship. You and I hit it off the first time I heard you say that. Yeah. And so my advice here is ask a lot of really good questions of your clients. Try to listen, right? The other thing that our research showed was that the driver of emotional trust is actually listening. It's not talking to your clients. It's asking good questions, getting out of the way, letting them talk, and listening to what they say, and then synthesizing that and kind of using that in terms of what you're helping them achieve. So pick up the phone, call your clients, ask them some good questions. Your clients are going to love you. Your practice is going to grow, and you're going to achieve great things together.
Yeah. They don't necessarily want to hear anything about taxes or investments. Yes, that's of interest, but it's many times about life. I always say now
Functional trust, right? It's less than
Yeah.
20% of the equation. No, it's
Right.
you have to be good at it. It's not
Exactly.
optional.
I like it. I like it. All right. I'll throw it over to you, Andres.
I actually love this. I'll leave you with one last stat is 28% of families in our study prefer advisors trusted by their parents.
Mm,
So I think this is such an important thing is when we have, there's a death. I may not have a financial advisor. I don't know where to go, right? So how can we really build that trust? And we have many advisors now when they onboard a client is who's in your estate plan? Who are your beneficiaries? Who's your executor? Do they know who I am? Do they know how to get a hold of me? Do you want me to set up a intro meeting, etc.? So it's really at the end of the day, it's all about trust, both on investing. At the end of the day, it's how can you deepen the trust and the service model that you have in estate planning. I think at the end of the day, it's just a way to help provide more peace of mind.
yeah.
It's to make sure that when your clients day in and day out are working hard, are going through different life stages, that they feel that, gosh, with this firm that I have and the relationship that I have with Rory, I feel really protected if something was to happen. And that's invaluable
Yeah.
from my perspective.
I agree. It's that peace of mind, clarity, and confidence. All right, gentlemen. Thank you so much for coming on the panel today. If anyone wants to reach out, what's the best way to do so, Andres, or learn more about?
So for us, super easy.
Yeah.
trustandwill.com/advisors. Very
Cool.
simple, very easy. You can schedule a call with our team. You can connect with me personally. I personally love learning about, firms, their practice management. So on LinkedIn, Andres Mazabel, and always love to connect and meet people in this industry. Very passionate about it.
I like it. Thanks, Andres. All right, Mike.
Yeah, same. So advisors.vanguard.com. You'll find all of our insights there. We have a little tab at the top called Advisors Alpha, and under there, retirement, behavioral
Yeah.
coaching.
It has that market hindsight tool, which is fascinating. I think anybody should go there and check that out.
Super proud of the market hindsight tool. And then same, love meeting new people and just having conversations with advisors. So Michael DiJoseph on LinkedIn. Hit me up.
Thank you guys for joining me, and thank you for taking part in the book. I appreciate it.
Yeah, pleasure always.
Thank you.
Thanks.
Appreciate having us.
All opinions expressed by Rory Henry on this website, podcast, interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.